Welcome, traders. Well, we got Mike from MS100 here again, and we're just going to take a little look at what happened in the markets today. I was actually out again doing consulting most of the day, but I did have enough time to come back and take a little scalp in the ERY, which is 3 times bearish the energy sector. But first we're going to take a look at what the Dow did. The Dow was up 58 points. Nasdaq was actually almost flat, and the S&P was up 7 points. But today we did see the VIX over here. The VIX did drop almost 5%, while these indexes were up almost 0.75 at the most here. And that's very interesting. This is probably happening this week because we got options expiration. The market is going to try to chop people out of their puts, out of their calls. Stocks are going up, stocks are going down, stocks are going flat. So that's basically what's happening this week. Very choppy week. It's been happening for the last couple of years. The options expiration gets choppier and choppier. Well, today, looking at the UUP, we saw the dollar increase almost 0.5%. The GLD, we saw gold drop 0.83%. Just scrolling down, just taking a look at some of the stocks here on my menus. Some interesting plays. We've got consumer, non-cyclical stocks all in the green today. Energy was mixed with the USO, up 0.39%. We have the UNG again today. Let's see where that's at. The UNG was at, oh man, don't even have it on my watch list. Well, I think the reason, oh man, I forgot. All right, so on our UNG trade that we had recently, I actually took the UNG off this morning with the gap open. I took that off this morning in the pre-market. Let me bring this chart over here for you. This UNG over here, I took it off in the pre-market right, let me make this a little bigger. Took it off, the rest of our trade off this morning, right around this 9 o'clock area where we had that big bar gap down. I actually got 1603 for my UIG here this morning, and I'm out of that. Got in at 14. I'm still holding some of my FAZ. I did evaluate some of my position from the phone currently today, and I am still holding that. I'm going to take a look at that chart and take a look at the S&P with you guys, and we'll see what's going to happen. So let me bring up those charts, and we'll take a look at the S&P first with the SPY. Well, guys, here's the 5-minute chart of the SPY today. And you notice how we did gap up a little bit today. We sold the gap, and right around this 9:45 to 10 o'clock hour, we've been getting the reversals in the market. And today, if you're lucky enough to get on this reversal, you got a real nice pop. Now, normally when I trade the market, I like to trade between 9:45 and 10:15 and 2 to 2:30, and sometimes even into the 3 o'clock hour, looking for different reversals going to happen in the market. Now, as we got this reversal today, we sort of just chopped around here for the rest of the day on pretty light volume. We did have some more volume here on the close, but it was nothing that I would have liked. Now I'm going to just move into some analysis on the daily chart here. This is the daily chart of the SPY. Now, right now, I'm looking at this chart, and today, yeah, we did buy, but we bought on relatively low volume. There was no volume in the market here at all. We do have our faster stochastics here starting to turn up, but the slower ones, they're still dripping down below 40. If you look at the chart setup today we did move up higher, but it does kind of start looking like it's creating a possible bear flag on this formation. We are starting to consolidate underneath this 20-period SMA moving average, and we're getting squeezed between the 20 and the 200. I did expect some sort of pop today in the markets because we have all this moving average congestion here underneath, and it might be pretty tough to be able to break that. Now I'm going to go into this talking more on this moving average congestion in my next video on part 2 because I'm running out of time.